What we're going to talk about today is negative gearing. So what is negative gearing? Most people think negative gearing is just on property. It's actually not. Negative gearing is actually on any investment where the income is not enough to cover the expenses in the eyes of the tax department. And today we're going to talk to you about property. So when you have property, you have two things. We have income and we have expenses. Now in relation to the expenses, you have two types. The first one is what we call cash expenses. Now, I call them the bills. So, as an example, you have interest, you have rates, you have agent's commission, you have insurances, you have letting fees, and all the other things that you physically pay, whether you have a tenant or not. And the second item, and a fairly important item in relation to negative gearing, is what we call non-cash expenses. Now, non-cash expenses are expenses that the tax department will allow you in your tax return that you don't have to physically pay in cash. So as an example, if you bought a house and the house is worth say 400, the building is worth 200 and the land is worth 200, the tax department says we will give you 2.5% of the cost of the construction as a building depreciation allowance for the next 40 years. The second one is what you call chattels depreciation, or commonly known as fittings. Now, they wear away a bit faster, which is your carpets, curtains, blinds and light fittings, so you get a higher rate of depreciation for those. And the third item is what we call loan costs. Now, you'll remember when you bought your own home, you'd have valuation fees, you would have had bank solicitors fees, you would have had bank searches. Your own home, they're not tax deductible, whereas for the investment property, they are. And the third item, very self-explanatory, is rent. Now, negative gearing, very simply, is when that rent is not enough to cover those expenses on paper, and then the difference between the two is offset against your normal 9 to 5 income. And let's have a look at some real numbers. So this is based on an example where somebody's earning $100,000 a year, they bought a property for $300,000 and it's rented for $370 a week. Now, so you earn the $100,000. Now, you pay tax, which is just a tad under $27,000, because we all know that your employer takes the tax out and sends it straight towards the tax department. However, we're going to fast forward it to the end of the year, we bundle everything up in our shoebox and we take it to our accountant, and the accountant works everything out. He then says, okay, we need to add the rent to the property, which is now $118,000. However, we then need to take what you call these cash expenses, which is what we said is all the bills that you've got to pay, which is another $26,000. Then we have these non-cash expenses, which, as I said before, which is the depreciation, the loan costs, etc., which is about another $5,000, which takes the income on paper to $87,000. So your taxable income drops from $100,000 to $87,000. It doesn't mean you've earned $87,000. But as far as the tax department's concerned, you have. So let's step you through this slowly. So at the moment, you've got your $100,000. You pay the tax of $27,000, goes straight off to the tax department. We fast forward it to the end of the financial year. The tax department says, okay, we need to add the rent, which takes your income up to $118,000. We've also got to take the bills into account because that's money that's gone out. That brings your income down to $92,000. We've also got the building depreciation, chattels depreciation, and loan cost allowances that come off, which brings your taxable income down to $87,000. So therefore, the tax on $87,000 is just a tad under $22,000. However, you've already paid $27,000. So therefore, you'll actually get a refund of $5,000 from the tax department. And that's great. So that's actually how negative gearing works, very simply.
So if you want more information on this, have a look at our website eqc.com.au or give us a call 1800 263 980.